you've done really well in terms of revenue, profit growth as well in different economies across Latin America, but at the same time, macro challenges. I mean, prices surging across the region. How do you plan to maintain this trajectory?
Yeah, so coming off the back of a strong second quarter, I think we remain cautiously optimistic about the potential for consumer strength in the region despite turbulent times. And I think equally important, a lot of the investments we made throughout the pandemic in logistics, in category expansion, to a certain degree are beginning to pay off as we see acceleration in share gains as the user experience we've been delivering has been driving more and more consumers to our website and to our financial services platforms.
One of the places that you actually did pretty well was Mexico, and of course you've been investing heavily there. You take a look at this chart on the Bloomberg and you see though that really growth, whether it's in Mexico or your biggest market, Brazil, is almost going nowhere. So really, how are you seeing consumption patterns perhaps changing, and do you see that affecting your business overall?
So we do see, as retail reopens, a deceleration in the business if you look at the year-on-year comps. If you take a longer view, what we think is very interesting and somewhat unique about the region is we're really not seeing the kind of give back of a lot of the pandemic growth in user adoption of e-commerce. So if we look at our trend line over a longer period, our business has grown significantly in the pandemic. And even if you factor the recent deceleration, we are still a few years ahead of where we would have been if we had just trended out the pre-pandemic growth rates. So I think Latin America is presenting a unique case compared to most global markets of greater stickiness in terms of consumers' move online.
Pedro, the company has also invested heavily on crypto, not just in terms of your own balance sheets, but also crypto products in Brazil. I'm wondering how the so-called crypto winter has played out for you.
Yeah, so I think our investments, first of all, have been more on the product side and building capabilities for our users to be able to buy, to hold, to sell, and to get introduced to crypto. We had nearly 40 million active fintech users in the region, so we think we're a great platform for many Latin Americans to start with crypto. I think the crypto winter, it has taken some of the sales from the initial growth. We had significant user adoption in the first months, but that doesn't really change our long-term optimism or outlook for being able to offer solutions in terms of crypto wallets and access to crypto for our users when we take a longer-term view on the potential for crypto in emerging markets.
Do you expect the fintech business to be over 50% of revenues by the end of the year?
So certainly when we look at the rate of growth that fintech is growing at, we did over $30 billion of fintech payment volume in the second quarter, growing north of 80% year over year. It is soon to surpass the commerce side of our business in terms of size. Whether that happens over the next 2 quarters or 4 quarters, harder to tell, but it certainly is. We are at the cusp of the point where more of our business will be coming from the fintech side than the commerce side.
Yeah, your fintech arm also borrowed significantly from Goldman Sachs in order to expand. Do you see more investments going forward, or are you sort of staying put given that a lot of your already earlier investments are paying off?
So I think one of the most successful lines that we've been developing is the credit line. It's a big driver of adoption of our fintech services. Over 40% of our users are getting access to credit for the first time through our platform. And a lot of these facilities that we have with our financial service partners are to fund the growth in the credit business, which has been a significant driver and catalyst of more adoption of our wallet. On the merchant side, it helps our commerce merchants sell better and have greater working capital access to improve their businesses. And on top of that, it's been a very profitable credit book or set of books for us so far. So I think it makes sense to continue to invest in the growth of that credit business. And for us to not have to do that entirely from our own balance sheet, these warehouse facilities with financial partners make a lot of sense.
What about growth via acquisitions? Is there anything planned for the next year or so?
I think we've typically been more of builders than buyers. We do see in general more attractive valuations for potential growth through acquisitions. So we're always on the lookout. But again, if you look at our corporate history, we've typically acquired smaller things that are either acqui-hires or tuck-ins, and we tend to do most of the heavy lifting and build our own platforms. We believe that that leads in the long term to a winning user experience, a more fluid tech stack, and greater ability to innovate on behalf of our consumers than through acquisitions.